Welcome back, traders. On today's video I'm going to show you this swing trade I took on AeroJPY. I took this trade on the 5th of this month, and then it finally got to my TP today. I also shared this with the community, which I'm going to show you guys right here. Share this with my Telegram community, which will be under the description of this video. Okay, please make sure you join, like and subscribe to this channel also. And you can see this is on the 5th of December when I put the trade that it's almost gotten to our entry point. Then I keep updating the community even when we got activated on this trade. Now I'm going to make a quick recap on the reason why I took this trade. So let's dive into that. Now if you look from the higher time frame, price has been trading bearish from the higher time frame. Took out this liquidity down here, then price traded up to this point, and then we got a valid market structure shift. We have a valid market structure shift, and that is what we have been waiting for, to get a valid market structure shift so that we can short price to the upside, because you don't expect price to keep going down forever. There must be a reversal point. And when do we get the reversal point? When we get a good market structure shift with a good displacement like the one right here. This is on the 4-hour time frame. If you see, price gave us a market structure shift right here. Let me put that properly. We have a market structure shift right here, or you can call it a change of character, whichever you prefer to call it. They're all same thing. Market structure shift, and then you can see price also swept liquidity below. I'm gonna call this the dollar sign. Price swept liquidity below. Then this is a typical example of the ICT breaker block. Okay, this is a breaker block. How do you know this is a breaker block? Some people get it confused when it comes to a breaker block and then a mitigation block. Now this is a breaker, and then this is a mitigation block. Just a little bit of difference. You can see for the breaker block, price swept below, while for the mitigation block there was no liquidity sweep. Okay, so this is basically the difference between a breaker and then a mitigation block. Now let's head back to our chart. All we have to do is to find the confluence, or using our fib level to find what we call point of interest, where price is likely going to trade into. But since we had a market structure shift, I'm not going to use the fib level, because this is a breaker block and this is the first market structure shift after a bearish movement. So what I'm going to do is to find my institutional reference point. I have a breaker right here, and on that, if you look closely, you have a fair value gap here. If you look closely, we have a fair value gap right here. So all I have to do is take this off, and then since they are confluencing, I'm going to use the breaker block, just the tip of the breaker block, and my stop loss definitely will be below this place. I'm not gonna shrink my stop loss just to risk a little. Okay, so I'm gonna put my stop loss where it's supposed to be, and then adjust my lot size to fit into that. And I'm gonna target this high. This was where I was targeting, this high that looks like an equal high. Okay, mind you, at the course of this trade, I was also breaking even all my trades, and then there are a lot of opportunities. Even if you miss this one, there are still more opportunities that you must have seen to enter this trade. Like from here, we have another break of structure. So if you miss that first entry, you still had another entry. We have a break of structure down here, and then we have this other block right here. You could still enter from this point right here. So Missing the first entry is not enough reason to say you are not trading until price hits this previous target. So there are still a lot of opportunities for you to enter this trade. If you can't find an entry from this point, you go to the hourly time frame. You find an entry. Okay, so if you miss this one, there's still another entry right here, this imbalance right here. Wait for price to give you another market structure shift, which you see from this top right here, and then you can still enter from this place or the top, or just 50% of that imbalance, your stop loss below, and then you target the same high. So you see three opportunities present in just this swing trade movement. Okay, guys, I hope you find this video helpful. Please like and subscribe to my channel. Thank you.